The market always moves along the path of greatest pain. Remember this rule. Always. You look for easy confirmation. But big money never gives it to you on a silver platter. They wait until you are tired of waiting. And that is when the real movement begins. The crowd draws obvious lines on the chart. But these lines exist for only one thing: to burn. Big capital does not go where everyone is standing. It goes where there is emptiness and frustration. Your main problem is the eternal chase after the price. The desire to catch every bounce. You see a small move, and the fear of missing out forces you to throw money into the fight. This is not trading. It is a game of roulette, where you always end up losing. The price must show you its strength. You should not impose your will on the price. A true entry point always feels uncomfortable, because it requires endurance and faith. Everyone waits for a breakout at round numbers, placing their buy or sell orders there. They believe the price must confirm a psychological level. And this is their fundamental mistake. The market knows where your stops are, and it will come to where they are most concentrated. The big move of 2026 will start from a level that the crowd has already written off, considering it irrelevant. You must learn to see, not the obvious, but the necessary. You must learn to sit on your hands until your plan works perfectly. This is the hardest part. You constantly seek activity, because activity gives you a false sense of control. Remember, most often, money is made not when you click the mouse, but when you just watch. Patience is not just waiting. It is the active observation of the crowd exhausting its strength. Do not let the market force you to act until it reveals its cards. You waste energy on micro-movements. And then, when the real trend begins, you have no strength or capital left. Small trades are emotional, exhausting noise that only distracts from the big picture. You come to the market to strike it rich, but you only get crumbs from someone else's table. It is like catching small fish while a whale swims nearby. Stupidity. And a waste of time. Focus only on trades that promise a significant, powerful move. When you see strong consolidation, the crowd believes it's an accumulation of energy for an immediate explosion. In reality, it is often a trap, where a large player slowly unloads their position. The price moves sideways, creating an illusion of safety and stability before collapsing. Consolidation is the place where weak hands gradually give their assets to the strong. Do not fall into this cycle of self-complacency. Expect a sharp, dirty exit. Most traders enter a position when the price seems cheap, based on their past memories. They ignore the current context, believing the market is obligated to return to the old, comfortable price. The market does not remember yesterday. It only reacts to today's flow of capital. Your attachment to past peaks or bottoms is an emotional anchor that drags you down. Forget what was. Look only at what is happening now. The book I wrote, Reminiscences of a Stock Operator, is just a testament that the psychology of the crowd has not changed in a century. The true indicator is your internal readiness to accept a loss and move on. If you cannot sleep because of an open position, then your position is too large. The money you invested must become dead to you until it is time to fix profit or loss. Reduce your position size so that fear does not block your vision. The crowd is always wrong about timing. They enter too early or too late, but almost never on time. If you feel like it's the perfect moment, you are probably already hours or days late. The best entries happen when you are already tired of waiting and almost ready to give up on the plan. The market rewards not speed, but precision and infinite patience. Wait for the move to confirm itself twice or thrice before jumping in. Exiting the market is a separate art that is often ignored, and it is a catastrophe. Most hold losing positions, hoping for a return, and fix profits too quickly. This is asymmetric thinking that ruins your balance slowly, but inevitably. Profit must be allowed to grow, and a loss must be cut ruthlessly and instantly. Do not let a small loss turn into a big, unbearable problem. All traders look for a secret indicator or a unique formula, but the secret is in discipline. You can have the best trading idea in the world, but if you cannot execute it, it is worth nothing. Discipline is the ability to do what you must, even when you are scared or bored. Do not rely on emotions. Rely only on hard, predefined rules. The market does not forgive weakness of will. It simply takes your money. When you see a sharp, vertical move, most feel FOMO. They rush in, buying at the peak or selling at the very bottom, becoming fuel for the correction. These impulsive moves are designed to lure late players into a trap. Before reversing, big trends start quietly, slowly, during general indifference, not on loud news. Ignore the noise. Seek the silence at the beginning. An amateur trader seeks confirmation of their position in the news, in chats, in the opinions of others. This means they have no internal confidence in their analysis. And this is their weakness. Your decision must be final, independent, and based only on what you see on the chart. Other people's opinions only create noise. That prevents you from hearing the voice of the market itself. Do not seek support. Seek only evidence that your position is wrong. If you are trading to win back a previous loss, you have already lost the battle. The market senses your despair and your greed, and it will take advantage of it. Revenge trading is the shortest path to the total depletion of your account. Every trade must be an independent event, evaluated without any connection to the past. Clear your mind of resentment, and start with a clean slate, or the market will crush you. There is a false idea that constant presence in the market is a necessity. But it is not. I can sit for months and do nothing, waiting for my perfect moment. This time of inactivity is the time of the greatest earnings, because you preserve capital and mental energy. Every day you didn't lose money is a day you earned. Learn to be a patient sniper, not a confused machine gunner. To understand where the crowd expects a big move, just look at the most discussed price levels. If every analyst is talking about a certain level, most likely, the price will ignore it or use it as a trap. The big move of 2026 will begin when everyone has already stopped believing in its possibility. It will be a sudden, powerful surge that leaves most behind, catching them by surprise. This is the only true logic of big money movement. The mechanics of big capital work against your intuition. They don't buy all at once. They accumulate a position. They feed the market with small buys or sells for weeks, without letting the price move noticeably. This quiet process is called the accumulation phase, and it often looks like a boring consolidation. When the position is gathered, the move starts with a small push that no one takes seriously. Your task is to identify this quiet, masked work. Many believe that trading is a game of wits, but it is a game of emotional control. The smartest people often lose because they cannot give up their brilliant idea when it is wrong. They prove their analysis was right, while the price destroys their account. You must be ready to admit a mistake immediately, without hesitation or self-justification. The market is not interested in your intellect. It is only interested in your willingness to pay for mistakes. The problem of blind entry: you buy or sell because the price reached a certain line, ignoring the strength of the move. You need not only an entry point, but confirmation that at this spot, big players are truly interested. Sometimes the price pierces the expected level, and then returns, leaving only devastation behind. This is called a stop run, and it is the only purpose of such a maneuver. Wait for the price to return and stabilize where you expect it. When you first enter the market and get a small profit, you get a false sense of invincibility. You think you found the Holy Grail, and that now money will just flow into your pocket. This first success is the most dangerous trap the market can throw at you. It forces you to increase risk and trade without a plan, which inevitably leads to disaster. Be especially careful after your first easy victories. Liquidity is the blood of the market, and a big player is always looking for places where it clusters most. Liquidity clusters where the crowd's stop losses are. You must look for these exact zones. The crowd places stops en masse, directly behind obvious highs or lows. The market comes there not to test the level, but to take those stops and get fuel for its own move. Understanding liquidity is the key to big money. Do not trade all day. It exhausts you and destroys your ability for objective analysis. Choose only 1 or 2 hours, when the market is most active, and focus all your energy on them. Constant monitoring of the chart leads to overtrading, and forces you to see patterns that do not actually exist. Rest is not a luxury. It is a necessary part of your trading plan. Your mind must be fresh, like morning dew, not clouded by fatigue. A trader must be, first and foremost, a risk manager, and only then a seeker of profit. Your first priority is capital protection. Your second is loss minimization. If you cannot sleep at night, because you're afraid the market will go against you, reduce your position immediately. Do not let fear control your life or your trading decisions. Losses are just the tuition fee, but this fee must always be controlled. We talk about the year 2026, but it is only a metaphor for the big, expected move. That will change the market. The crowd is waiting for confirmation. But that confirmation will be too late for them. They wait for news to tell them, buy now. This is the beginning. The real beginning will be without any news. At quiet, useless price levels. Do not look for explanations in the newspaper. Look for them in the mechanics of the order flow. All the technical indicators in the world are worthless if you do not understand the one thing that truly moves the market, the psychology of capital. This is why the book, Reminiscences of a Stock Operator, which I have adapted for the modern trader, remains your most powerful ally in 2026. This is not just the story of Jesse Livermore. It is a detailed map of the market's minefields. It teaches you to see traps where others see opportunities. While the crowd searches for magic formulas, you will gain access to the eternal laws of price and emotional control, laws that have enriched the few at the expense of the millions for centuries. Do not become another statistic. Become the one who understands the rules of the game before it even begins. You can find the link to the book directly below this video. When the market gets stuck in a long consolidation, people start to get nervous, thinking the asset is dead. They sell their positions out of boredom or a small loss, looking for more interesting instruments. This boredom is the necessary mechanism that allows big players to complete their accumulation. When everyone is tired and gone, then the time comes for a swift, unexpected explosion. A big move is always born in silence and indifference. Remember that. You must learn to read the psychological state of the market, not just its graphic patterns. When euphoria reigns and everyone feels like a genius, it's time to sell. When deep disappointment and total despair reign, the bottom is near. The big move of 2026 will be caused exactly by this maximum disappointment. In those who waited for it earlier, the emotional state of the crowd is your best contrarian indicator. You should not have a constant bias, neither bullish nor bearish. You must be an amphibian. The market is not interested in your personal opinion. It just moves. You must be ready to change your position instantly, as soon as the price gives you a signal. Rigidity in views is death for a trader. It is an emotional attachment to a false idea. Be flexible, like a reed in the wind, and you will survive. Forget the concept of average price. It is a path to suicide in the market. You buy an asset, it falls, and you buy more to reduce the average entry price. This only doubles your risk and threatens total destruction of capital if it falls further. If your first trade went wrong, you were likely wrong about the direction. Just get out. Adding to a losing position is a sign of panic, not smart management. Spend more time preparing for a trade than on the trading itself. Analysis should take 90% of your time, and execution only 10%. Clearly define where you enter, where you put your stop, and where you fix profit before the entry. Do not let emotions dictate the rules in the heat of the moment. It is like in battle, you win thanks to a strategy developed in silence, not in the fever of the fight. Many believe that professional trading means fast, complex operations. But it is a myth. The biggest money is made on big, obvious moves that require only endurance. I look for the smooth path of least resistance, where the price moves easily and without a struggle. If you have to fight the market, you are standing against the trend and will surely lose. A real trend is like a powerful river that carries you without effort. The problem of adjusting the stop loss, this is emotional self-complacency before a catastrophe. You see the price approaching your stop, and you move it further, hoping for a bounce. This means you are letting hope control your trading, and hope is the trader's worst enemy. When a stop triggers, you should feel only relief, not disappointment. A stop loss is your safety helmet. You cannot take it off when the shelling begins. The crowd always expects the big move to have happened yesterday, and if it isn't, they lose interest. It is like waiting for a train that only comes once a day, and you leave the station 10 minutes before it arrives. 2026 will be the year when the crowd's patience runs out, and that is when the storm begins. You must be ready when no one else expects or believes. Your greatest profit will always come from your solitude. When you see the price returning after a breakout, the crowd thinks it's a false breakout, and quickly opens a reverse position. This is a classic trap. The return is often a test of liquidity, and the last chance for big players to add to their position. The real move begins when those who caught the false breakout are already sure they are right, and have opened large positions. This is called a maneuver of confusion, and it is necessary for gathering stops. Always ask yourself, who is selling when you are buying? And who is buying when you are selling? Behind every trade is a real person with an opposite idea. And one of you is wrong. Big money never rushes. They buy slowly. When no one else wants to sell. Your speed is your weakness. It means you are reacting. Not planning. Plan like a grandmaster. Who sees the game 10 steps ahead. There is no perfect trading system that works always. All systems give false signals. Your task is not to find a perfect system, but to know how to manage its flaws and risks. Even the best trader has more losing trades than you think. But he wins on the size of the profit. Focus on making your winning trades much larger than your losing ones. This is simple arithmetic that most ignore. The mistake of too many assets: you try to follow 10 different charts at once and see no clear signal. Lack of focus is a scattering of capital and attention, and it leads only to chaos. Focus on only 1 or 2 assets that you understand best and that have the greatest potential. A deep understanding of one market is better than superficial knowledge of 100. When you are sitting in a profitable position, never let that profit turn into a loss. This is a golden rule. If the price has already moved a significant way, move your stop to break even. The profit you lost always hurts more than a loss. Protecting accumulated profit is a sign of professionalism, not greed or fear. Fix at least a part to calm your nerves and let the rest of the position grow. You cannot control the movement of the price, but you can fully control your entry and exit. If you feel the market has become too volatile and unpredictable, just get out and wait. This is not cowardice. It is the preservation of capital for more favorable conditions. A true trader knows when to fight and when to step back and reload the weapon. Sometimes the best trade is the one you didn't make. The market always moves from agreement to disappointment and back, in cyclic waves of emotion. The big move of 2026 will happen after a wave of total despair. When even the optimists vanish, they will sell on panic news. And at that exact moment, a quiet, powerful reversal will occur. Do not buy when everything seems good. Buy when everything seems hopeless. It is hard psychologically, but it is the only way. Your entry price is only the first part of the equation. More important is where you put your stop loss. The stop must be where your analysis admits its error, not where it is convenient for you. If you cannot justify the stop location logically, then your entry is speculative and groundless. The exit price is more important than the entry price, because it determines your viability in the market. The mistake of short-term focus: traders look at 5-minute charts, trying to catch every move. They lose the big picture, unfolding on weekly or monthly timeframes. Big moves always start on big charts. A daily move is just noise. You must first identify the big trend, and then look for an entry point on smaller charts. Do not confuse noise with a signal. It is deadly. You must learn to see the true price of an asset, not the one shown to you every minute. The true price is the one at which big money is ready to accumulate or distribute, and it often remains unchanged for a long time. The market constantly makes false moves up and down to confuse short-term speculators. Ignore this volatility and focus on levels that have historical weight for large players. Weakness in trading manifests when you become too self-confident after a few successful trades. This confidence forces you to ignore rules and increase risk without proper justification. There is no room for ego in the market. You are here to make money, not to prove your genius. Always approach every trade with sober skepticism, even if your previous trade was perfect. When everyone talks about a bullish or bearish market, you must question it. General opinion is a source of liquidity for big players, not a reliable signal. If even your taxi driver or neighbor is discussing where the price will go, it means it's time to prepare for a reversal. 2026 will be the moment when the crowd is absolutely sure of the current trend's stability, and that is exactly when it will break. Use dashes and pauses in your work to give yourself time to think. Do not make a decision in a second. Let the information settle like dust. Haste is a sign of poor planning, not high professionalism. I often look at a chart for half an hour, without making a single click, just waiting for the picture to become absolutely clear. The market will not run away from you. It is better to miss a move than to lose money due to haste. The trap of information overload: you read too many sources, and your head fills with contradictory signals. In trading, less is always more. You need only a clear structure, not tons of news. A true trader uses only a few reliable tools that he understands perfectly. Cast aside all media noise and focus on the clean price chart. The price already includes all necessary information. You must have a clear exit plan. Even before you enter the market, most traders enter a position, hoping something will happen, and only then think about the exit. This means they let the market dictate the terms, not vice versa. An exit plan should have several levels of profit-taking, not just one target. Be flexible in fixing, but immovable in stops. Big capital does not move the price in one go. They use waves to create an illusion within an illusion. They might buy, and then sharply sell, to create panic and force the weak to sell cheaper. The price always moves along the path of greatest discomfort for most participants. Do not believe the first sharp move. It is often a trap, masking the real intent. The market is a predator, and you are its prey. If you do not learn to think like it, a predator does not waste energy on small fuss. It waits for the ideal moment for a fatal strike. You must follow this brutal logic, wait for a high probability, and act with maximum decisiveness. When you finally make an entry, it must be powerful, fast, and with no way back. Uncertainty in the market always costs money. Do not trade round numbers just because they're round. That is a psychological landmark for the crowd. 2026 might be the year when the price stops slightly below or slightly above the expected level. This is done so that the stops of large players, placed exactly on these round numbers, do not trigger. Look for places where the price actually reversed before, ignoring psychological barriers. You must be indifferent to the money in your account, perceiving it only as a working tool. As soon as you start attaching to numbers, you lose objectivity and start trading with emotions. If you see the profit increasing, it should not cause euphoria, but only confirmation of the plan. If there's a loss, it should not cause panic, only a cold execution of the stop loss. The reverse mistake: you believe that after a big fall, a strong rise must necessarily follow, and vice versa. The market is not obligated to recover. It can continue moving in the current direction until total depletion. Do not look for a bottom or a peak. Let the market find them itself and give you a signal. Trading on a reverse is a game against the trend, and the trend is your only friend. Learning to fix a loss is the most valuable lesson you will get, and it is always painful. A loss should be small, controlled, and instant, like bandaging a wound. Every trader, even the best, has losses, but his strength is in the speed of accepting them. If you delay fixing a loss, you delay your success. The big move of 2026 will be caused not by economic news, but by the fatigue of the players. Fatigue from consolidation. Fatigue from false signals. Fatigue from inactivity. They will sell their assets simply because they are bored. And at that moment the real growth begins. This is a game of nerves. And you must be the one whose nerves are the strongest. In the market, not the smartest wins, but the most resilient. You must have the ability to close your position, regardless of how you feel about it. There are situations when your instrument might show a perfect entry, but you feel internal discomfort. This is sometimes the only true signal. If you are uncomfortable, reduce the position or get out. Your subconscious might see what your mind ignores. Trust this feeling. When the price starts moving according to your plan, do not interfere and do not try to optimize it. Most traders ruin their profit trying to catch the last 5% of the move. If you are already in the flow, just let it go and do not interfere. Put your stop at break-even and forget about the trade for a few days, giving the trend a chance to develop. Your trading journal is your only true teacher, not expensive courses or mentors. Record every trade, its logic, your emotions, and the reasons for the exit. Even if it is successful, in 6 months, you will see that your mistakes are cyclical, and you do the same things again. Trading is constant work on yourself, not on the market. Analyze your scars, not your victories. Do not try to predict the exact top or bottom. That is stupidity and waste. You are here to make money on the movement, not to be a prophet. Accept the fact that you will never buy at the absolute bottom and will never sell at the absolute peak. Leave these extreme points to big players, and take only the middle, reliable part of the trend. Your profit is not a perfect entry, but perfect trade management. In 2026, you will see a strong, powerful move, but you must have free capital to enter it. If your capital is locked in losing or zero positions, you will miss this opportunity. Free your money, fix losses if necessary, and wait for a clear signal. Do not hold trash. Make room for gold. The law of big money: they always act when it is least expected, and never go down the beaten path. They create an illusion of weakness where they prepare strength. And vice versa. 2026 will begin from a level the crowd has forgotten. Because it will allow big players to enter quietly. Be prepared for shock and unpredictability. This is the real market. If you cannot find a reason for an entry, just do not trade. It is your safest choice. The absence of a trade is not a loss. It is the preservation of your combat potential. You should feel that the market itself invites you to action. And not that you force trading on yourself. Remember, the most successful traders spend most of their time out of the market. Your risk per trade should be such that even a series of 10 losses in a row does not take you out of the game. If you cannot withstand 10 losses, then your position size is too large. Stress test your system. Test it. And only then start trading. Less risk leads to more psychological stability. And stability leads to profit. When you see your position growing, do not relax. It's a time of increased vigilance. You must constantly check if the fundamental or technical context that confirmed your entry has changed. The market can reverse instantly. And you must be ready to act faster than the crowd. Stay cold-blooded. And react to what is, not to what you expect. Always work with a market that gives you enough volatility. But not chaos. If moves are too fast and unpredictable, it's not trading. It's slot machines. Choose assets where you can calculate the logic of big players' moves. 2026 will be a year that gives you a clear, powerful trend. If you learn to see it. The biggest money in the market is always made. Not by speculation. But by endurance. You must survive all panics and euphorias. Staying true to your plan. Do not let daily noise distract you from the big picture and your ultimate goal. Trading is a marathon of patience. Not a sprint of greed.